Good morning, it's Jonathan Barratt with the morning debrief. It's the 5th of November, the current time is 8 o'clock. What a night last night. It seems like Bernanke's stimulus, he basically got his early Christmas presents. The equity markets had a very solid night. Basically, the Dow was up 200 odd points. Commodity markets also rallied on the back of, obviously, Ben's stimulus package. I think a lot of us are a little bit sceptical out there at the moment, and I think we want to see quite an aggressive form of pickup in the actual demand for goods. Now, obviously, it's been slowly happening, and I think this injection should, or hopefully, see it occur. But what we are concerned is that the stimulus package is, although it's not a shot in the arm initially, and it's the fact that it is ongoing, sends a message to us that they are really endorsing their weaker US dollar policy. And as a result of that, commodity prices by default are actually going to be quite aggressive to the top side, or it appears that's what's happening, and certainly how the market is actually reading it at the moment. So I think it's going to be a testing time, because as the economy grows as a result of the stimulus packages, the demand has to be sufficient to be able to allow the increased prices of the commodities to be able to clear correctly. And I think that's going to be the stumbling block that we'll have to look for. But at the moment, the theme for us is don't stand in front of a freight train. Prices are doing what they're doing, so you have to adjust your accounts or your positions accordingly, because obviously I think with the ongoing, the dollars will remain relatively weak. Also be on the caution lookout for intervention there, but at the moment that's what he did, and that's what we've got. So let's run through a few of the prices and see what we can make basically of them. The Dow was up 219 points. 11,434. The S&P was up 23. The Nasdaq was up 37. Just having a look at an overview around the world there, we did actually see the top 50 was up 53. FTSE strong move there, up 113. The CAC was up 73, and the DAX was up 116. All very, very solid there from the perspective of equity prices, and a lot of the portfolios which we've got for clients seem to be going quite well. So from that side, it's certainly a very positive picture. Okay, let's have a look at just a piecemeal as to what's really occurred out there. Currencies, as you'd probably appreciate, the dollar index are taking a bit of a battering on the back of everything, and as you can see there, a little bit of a lift there, but still on those incredible lows there, and we'll have to see what happens. I think it's a bit of a concern personally, because what you're doing is you've got inflated commodity prices, and that to me is a concern. Anyway, let's see how it unfolds. You can't change your mind on the dollar unless it breaks through 77. If that's the case, then obviously let's see what happens. Remember, most important data out tonight is the non-farm payrolls. It is expected to be better than the last one, up 80,000. The unemployment rate is meant to stay at 9.6, so let's see what happens. Anyway, let's just have a look at some of the primary inputs and the moves we had last night. Crude oil for once, 86.68. Now, for those following the tweets and also a lot of the commentary we put out yesterday, there were trigger points for us to move into markets if you wanted to, and as a result of that, I think a few clients are certainly well up. One of them was obviously crude on a breakthrough that to 85.20. Copper was another one on a breakthrough 386, and you can see that's had a strong move. I think the largest move we've had is with the gold market, and the gold market was certainly strong. There's copper. And still looking as if it wants to trade a little bit higher there as well. Gold, as we mentioned, $13.92, up $54. A phenomenal move, there's no doubt about it. And what we said yesterday to a lot of people was if it took out this 1365 area, which is that old high, then the ball game changes very quickly. The tracking the stimulus came out, people were upset, 1330 was the low round there, and then we've seen it rally ever since. I don't think it's the outcome that Ben wanted, but let's see what happens. On the Aussie dollar, Aussie continues to trade at 101.46. What does our reserve think? They put interest rates up, and then this comes out the next day. Really upset with what's occurred there, because it just puts us well out of the market in terms of competitiveness on our exports, and what prices we're actually seeing in the increase in commodities is actually being eroded by the value of the dollar. Well done, Reserve Bank of Australia. Okay, 101.40, the euro seems to be going okay. Dollar yen seems to be holding up very, very well. That's 80.73, and that's sort of holding up very well in terms of what's happening with the dollar. So let's see how that goes. On to the local market, 47.20, did break, quite happy about that, and up she went, and continues to defy a little bit of gravity there. but certainly very strong, and expectations are, I think, is for that to continue, and probably see it continuing to motor on. There was that 47.20 here, and as you can see, it's just one way at the moment. Let's see if we don't get any Friday jitters. Remember, Friday's the day that we normally get under a little bit of pressure, so let's see how that unfolds. Okay, that's pretty much a little bit of a wrap, but I just wanted to mention cotton. This cotton and oil are two examples, and particularly on the cotton price, we're at 140-year highs. We've got concerns on supply. That's going to push, and it has pushed the price up for cotton dramatically, as we can see by this trend. I'll just do the daily. Now, what I want everyone to think about is how are we going to push the higher costs of this commodity through the economy? Does it mean that shirts, anything that's used to cotton are going to be increased in terms of, 100% in price? So how are we going to pay for this if, in fact, Bernanke's plan doesn't actually work in terms of the stimulus? That's one of the critical questions that we've got to ask ourselves. We've had close to over 100% increase in the price of a primary input. How are we going to pay for it if, in fact, we've got no demand? And I think that, to me, is one of the toughest things that we've got to focus on. And, yeah, not 100% happy with what's happened over there, but let's see what else Ben can pull out of his bag of tricks. Anyway, so that's about it. On the economic front, let's just have a look. Obviously, we've mentioned a few things there. Economically, today we've got the quarterly monetary policy, PPI in the UK, very important, IP obviously in Denmark, and we've got PPI in the UK. Lots of data coming out. Canada, we've got some employment. Most important will be in the US. Now, there's a lot of data there. The focus will be on the non-farm payrolls. Last was down 95, up 60. Change in privates, we want up 80, and we want that employment rate. The change in manufacturing payrolls as well, that was also down. Now, they're expecting a bad number. I still can't get around it with what's happening. But anyway, let's see. Pending home sales expected lower, and of course, obviously, the unemployment number there at 9.6%. You could imagine if that came in at 9.7. Anyway, let's see what happens on that front. Okay, that's pretty much it from me. I hope everyone has a good weekend, and it's certainly going to be volatile tonight, so I think one of the sensible things to do would be not to go in with your full positions. Just try and trade it a little bit more conservatively because that volatility in the market is going to whip a lot of people around. Okay, that's it from me. Have a great day. Good luck tonight with the unemployment data, and we'll certainly talk to you next week.